A very good evening to all our viewers. This is WION Wallet. I am Sumit Chaturvedi. Let's go straight to our top headlines. China's economy grows by a healthy 6.9% in the first quarter this year, mainly signaling a steady growth in world's second largest economy. Snapchat CEO Ivan Spiegel's statement about disinterest in expanding business to poor countries like India has dropped its popular app Snapchat's ratings even as Indian netizens uninstall Snapdeal instead of Snapchat. The one-day strike by Ola and Uber drivers is likely to hit the private transport service sector in National Capital Region tomorrow. And Saudi Arabia's government is ordering its ministries and agencies to review billions of dollars worth of unfinished infrastructure projects. Now straight to our top story, where China's economy has grown by a healthy 6.9% in the first quarter this year, mainly due to a surge in infrastructure investment and exports, signaling a steady growth in world's second largest economy. The growth was well above full-year target of 6.5% and 6.8% increase registered in the fourth quarter of 2016. China's official data also suggested a pickup in domestic consumption as Feb retail sales jumped 10.9% from the previous year. China is trying to boost domestic consumption to shift focus of its export-reliant economy, which is also driven by massive state investments in improving the infrastructure. Also, China's exports, which were on a declining trend in recent years, showed increase in quarter one in yuan terms. China's export in yuan-dominated terms rose 14.8% year-on-year in the first quarter, while imports increased 31.1%. China's foreign trade volume reached $290 billion in first quarter, up 21.8% year-on-year. China's value-added industrial output, an important economic indicator, expanded 6.8% year-on-year. Now straight to most buzzing story of the day, where Snapchat CEO Ivan Spiegel's statement about disinterest in expanding the business to poor countries like India has dropped its popular app Snapchat's rating single star from an apparent 5-star on the app stores. In a case of mistaken identity, many people have downgraded and uninstalled the mobile application of e-commerce platform Snapdeal instead of social networking app Snapchat to mark their protest against certain unverified comments of Snapchat CEO about the Indian market. The social media has been abuzz with criticism against Snapchat CEO Ivan Spiegel after a report quoted one of company's former employees as saying that top executive told him that app is only for rich people and that he was not interested in expanding the business to poor countries like India and Spain. We are joined by our correspondent Sahil on more on this. Sahil, first of all, we would like to know how authentic this statement is. So here we faced a problem, especially Indian netizens were downloading or downgrading, in fact, and uninstalling Snapdeal instead of Snapchat. So clearly Snapdeal was at the receiving end because of Snapchat's problem. Well, Snapchat CEO allegedly had said that he doesn't want to come to markets like India. So we will go back to our correspondent Sahil. Sahil, how authentic the statement is?
Well, Sumit, as far as we know, there hasn't been any direct comment made by Evan Spiegel, the CEO of Snapchat, on this topic. What we know is that a disgruntled employee who is now suing Snapchat has allegedly said that Spiegel made this comment. And for the benefit of our viewers, let me just say what the comment is actually about. Basically, he says that the Snapchat CEO said he wasn't bothered with poor countries like India and Spain, and that this app is only for rich people, and that he doesn't want to expand into poor countries. Now, we need to also understand in what context that this comment was made in, if in fact he did actually make the comment. We have to understand, was this comment made publicly? We don't know that yet. Or was this a comment made in an internal team meeting? We also don't know that. But let's, for 1 second, assume that this comment was made, let's say, in a team meeting. And if it was made in a team meeting, I personally don't see anything wrong with that. I mean, let's say, tomorrow an Indian CEO says, you know what, I don't want to expand in Bihar because Bihar doesn't have any roads or doesn't have any infrastructure. Would you go all up in arms about that? I don't think you would. So we need to understand the context and we need to assess the situation before we as Indians start, judging other people and what they say.
But anyway, Sahil, the comments he has made is about the fastest growing internet market in the world. On the other hand, I would like to ask you, is the outrage on social media completely justified on this issue?
No, I don't think it's justified. Again, we have to, understand where everything is, coming from. I mean, what did Spiegel say that was so wrong? He said, India is a poor country. Well, spoiler alert, it is a poor country. It is a poor country, and anyone who doesn't agree with that is under the completely wrong impression or under the wrong notion. Because let's face it, he even mentioned Spain, by the way, in that comment. And Spain, might I add, has a per capita income of $32,000, right? While India has a per capita income of less than $5,000. So if a country like Spain hasn't made the cut for Snapchat, there's no way a country like India is going to make the cut either.
Well, thank you, Sahil, for bringing us up to date with all these details. Here, our correspondent, Sahil, was talking on this crucial Snapchat issue, which has taken the whole world by storm, at least in the Indian context, where Indian netizens are up in arms over Snapchat CEO allegedly calling India a poor country, and that's why he did not want to invest and expand here. Now, moving on, the one-day strike likely called by Ola and Uber drivers tomorrow is likely to hit the private transport service sector in National Capital Region, as this time even the rivals of Ola Uber drivers, black and yellow taxi operators, have come together in support of them. Now, thousands of commuters who depend on Uber and Ola in Delhi and NCR region might be left stranded on Tuesday, which is tomorrow, as drivers prepare to go on strike from 11 a.m. The strike has been called by the Sarvodaya Driver Association of Delhi, which led the February agitation also. The one-day strike will convene from Majnu Ka Tila in Delhi, and drivers will march towards Delhi Chief Minister Arvind Kejriwal's office. The association claims other taxi associations as well as auto drivers will also support the strike and refrain from playing their vehicles on the Delhi roads tomorrow. So clearly a big trouble on the way to people who travel in Delhi tomorrow. Now, moving to global story, where Saudi Arabia's government is ordering its ministries and agencies to review billions of dollars worth of unfinished infrastructure and economic development projects with a view to shelving or restructuring them. Riyadh's Bureau of Capital and Operational Spending Rationalization, set up last year to make the government more efficient, is compiling a list of projects that are under 25% complete. Many of these projects are relics of a decade-long boom of high oil prices and lavish state spending, which ended when oil began sliding in mid-2014, making it increasingly difficult for Riyadh to find the way to get money needed to complete their construction projects. Officials will study the feasibility of the projects in light of a government reform drive, which aims to diversify the economy beyond oil exports and decide whether to suspend them indefinitely or try to improve how they are conducted. Moving back to India, where digital wallet player Paytm has rolled out the food wallet feature on Paytm app, meant for corporates to issue tax-free employee benefits such as meal coupons and food vouchers. In an effort to tap into 25,000 crore tax-free allowance market, mobile wallet company Paytm has rolled out a food wallet to replace the traditional meal voucher and provide tax-saving opportunities to corporate employees. According to Paytm, this will help employers pass on food allowance to employees under the government-approved tax redemption bracket. The food wallet will be available in Paytm app, and the food allowance passed on to employees will be digital, eliminating risks of its loss or expiry. Paytm's food wallet comes with a unique interface where employees can see on real-time balance in the passbook and can locate the closest food outlet in the nearby feature on the app. This can be used at office cafeteria and also at a wide range of online and physical merchants, including small standalone outlets. The list includes KFC, Burger King, Zomato, Pizza Hut, Cafe Coffee Day and Big Bazaar, among others. Now, news from Infosys, where Infosys plans to focus now more on local hiring in the US and is also looking at setting up training center there as part of its efforts to tide over H-1B visa-linked issues. Infosys has been in favor of a healthy mix of local and global personnel, even though hiring locals in overseas markets often pushes up operational costs for IT outsourcing companies, with the US mulling over various measures to make visa norms stricter under the Donald Trump administration. Well, here, Indian IT firms have been contemplating tweaking their business models and accommodating more locals. Infosys said it has not seen any undue things that will impact the way it does business. Infosys is also facing challenges besides a legislation in the US, which was introduced but that proposed doubling the minimum wages of H-1B visa holders to $130,000. Most recently, the US Citizenship and Immigration Services, which is USCIS, had come out with a policy memorandum that potentially makes it difficult for Indian tech professionals to work in US at entry-level positions. Now, news from auto space, where South Korea's Kia Motors may put in as much as 10,000 crore rupees in one of the biggest foreign direct investment projects in India, with the Hyundai Motor Unit selecting Andhra Pradesh, the state in southern India, for its maiden facility after a 2-year and 4-state search in Asia's third-largest car market. The car manufacturing facility, a first for Andhra Pradesh, is likely to involve 2 phases with a cumulative investment of $1.6 billion, with first phase of investment amounting to about 6,000 crore rupees. The first phase of production facility will have an installed capacity to produce 3 lakh units a year. Kia's decision on the plant comes amid India's growing stature as a manufacturing hub, with several overseas companies responding to the federal government's Make in India initiative. While Isuzu Motors already has a major production facility currently under operation in the Sri City Special Economic Zone in Chittoor district, two-wheeler maker Hero MotoCorp is in the process of setting up its facility close by, involving rupees 800 crore of investments. Now, according to a World Bank report, India need not worry much about potential protectionist measures from US and other developed nations. According to a report, the protectionist move is bound to benefit India and will potentially open up new doors of opportunities. A World Bank official made a statement saying they strongly believe South Asian countries should continue to look outward and not to think about an inward-oriented growth strategy. There could be a trade diversion that might help countries like India grow. However, the report does not cover the issue of H-1B, which of late has emerged as of utmost importance for India. Indian companies believe that Indians would be badly hit if the US adopts a protectionist approach on H-1B visas issue. Now, straight to Indian telecom wars, where mobile operator Bharti Airtel is offering free high-speed data to its postpaid subscribers for 3 months as the price war among telecom operators heat up. Spurred by aggressive handouts by newcomer Reliance Jio, Bharti Airtel is offering up to 30 GB of free data for the next 3 months for postpaid subscribers logging onto the My Airtel app by April 30. The offer comes on the back of a similar scheme by company last month. Holiday Surprises offer, which is similar to Airtel's discounted Holi plans earlier this year, will give free data according to usage and will get added up to one's existing 4G plan. Staying with India, where Finance Ministry of India is believed to have permitted the Labour Ministry to go ahead with 8.65% rate of interest on Employees Provident Fund for 2016 and 17, which was last year. This will benefit over 4 crore EPFO members, while EPFO is Employees Provident Fund Organization. The Finance Ministry, in its communication to the Labour Ministry, has however put a rider that the interest rate should not result in a deficit for the retirement fund. This will enable the Labour Ministry to provide 8.65% rate as decided by the Employees Provident Fund Organization or EPFO trustees. Now, staying with India's macro picture, we're saddled with high bad debt and weak corporate demand. Credit growth plunged to a whopping six-decade low of 5.08% in the financial year 2016 and 17, which was last year. Now, growth in bank credit in FY17 at 5.1% has turned out to be the slowest in over 60 years, as state-owned banks burdened with bad loans struggled to find safe avenues to lend. The last time loans grew slower than this was in 1953 and 54, when bank credit growth had slowed down to 1.7%, according to data released by RBI. Outstanding bank credit as on March 31, 2017, this stood at 78.82 lakh crore. A large part of growth in lending has come in the last fortnight of the month, when banks disbursed rupees 3.16 lakh crore. But even after this last-minute surge, loan growth for the whole year was 5.1% as against 10.3% last year. Now, Jet Airways Pilots Union has asked its members not to operate flights with foreign pilots from May 1st. According to sources, National Aviator Guild has demanded that Jet Airways removes all foreign pilots after a recent incident in which foreign pilots allegedly assaulted a designated examiner during a training session in Bengaluru. The airline currently employs around 60 foreign pilots. Union has more than 900 members. Now, with this, it is time for a short break on WION Wallet. After the break, we will continue with our coverage of markets. Stay tuned to WION. Now, straight to our market segment, where Indian indices have ended the day on a negative note, with the Nifty ending below 9,150 mark. Sensex was down 47.79%. In global markets, Nikkei was down, while Dow Jones was also down. In global market, Dow Jones was down by around 0.67%, while we can say that FTSE of London was also trading flat. So this is how we define market today. Indian markets were clearly under pressure, and we are joined by our guest, Mr. Sanjeev Bhasin, who is Executive Vice President, Markets and Corporate Affairs, IIFL. Good evening, Mr. Bhasin. How do you see the market that traded mostly under pressure today? Mr. Bhasin, how do you see markets that traded under pressure today? Well, clearly global markets are also under pressure. Indian markets are also behaving under pressure now. Mr. Bhasin? Yeah. Well, clearly global markets, in global markets the tensions are over there, but in India results season is in focus. The Sensex and Nifty have ended on a negative note today. Japan's Nikkei was down. Dow Jones was also down by 0.67%, while FTSE 100 is trading flat. So global markets are under pressure. Indian markets are under pressure. Last week they were on an upswing. Indian markets were jumping even 100 points in a day. They clearly touched 30,000 mark briefly. Sensex touched 30,000 mark briefly, but then it came down, and since then it is on slide. Today also Indian markets were under red, and they are still likely to continue with their downward spiral over the next few days. We are joined by our market guest for today, Mr. Sanjeev Bhasin of IIFL. Well, good evening, Mr. Bhasin. We would like to know from your side, how do you see the trading happening for the rest of the week?
Can you repeat that?
I would like to ask you, how do you see the trading happening for rest of the week? Today the markets were under pressure. Globally the markets were under pressure. Everywhere there is some kind of geopolitical tension which is playing on the minds of investors globally. How do you see market panning out the rest part of the week?
Yeah, so see, India is in a very sweet spot on the back that there are strong domestic flows, and globally people have had a left out rally. So foreigners are very aggressively buying India. However, the aftermath is that there is a lot of geopolitical risk. There is expectation of earnings which are now built into the best, and we've had disappointment from the IT side. I would expect the market to be volatile, and I think at 9200 we would say that it's a near-term top. However, given that flows are strong, most of the weaknesses will be used as an opportunity to buy. I would expect the next the remainder of the week to be analyzing the results from the likes of TCS, HDFC Bank, IndusInd, which are large bellwethers, and what their guidance seems ahead. Only then we will decide the future course. But right now, it's all about stock and sector specific rather than the index, which is going to be flat to mildly negative depending on global cues.
So coming to sector specifics then, which sector you would recommend our investors or watchers or viewers of WION Wallet to invest in at this moment? What is your recommendation there?
I couldn't hear. Can you be a little louder?
Mr. Bhasin, which sectors do you think are going to give good returns to investors? Where should investors invest?
Yeah, so select blue chip pharma stocks like the likes where we are seeing a lot of risk reward as far as the price goes. Stocks like Lupin, stocks like NTPC, one of the biggest power utility, on the back that power cost has come to the lowest in the last 6 years. Some of the consumption plays, particularly the likes of Voltas, Blue Star, which will be the which will see huge sales improve on the back of a strong summer, and some of the financials, particularly banks and NBFCs, where we think credit costs will expand, and credit costs will show you a large expansion in net margins. So overall, we think some of the consumption, some of the utilities, and some of the pharma metal stocks should be good plays in the next 6 months.
And Mr. Bhasin, in China, the economy in quarter first has grown by 6.9%, while in India, the credit growth has slowed down. How do you compare these big two economies, and how do you see this impacting the global markets?
Well, yes, China has been a big conduit in the back that we've seen them stabilize their economy and now show some sort of growth from a lower base effect. Yes, the commodity rally has been driven mainly by China on cutting excess capacity, particularly in the steel side, and now they are now actually becoming net importers rather than exporters. Secondly, we think that as a global play out, India will have a lower base to move on because of the demonetization. But going ahead, we think that a lot of the reforms by the government, stronger rupee, better asset allocation, and fourthly, lower cost of interest should be a big boost for the economy on the corporate side and on the lending side. We think that the economy should start to show a lot of traction in the second half of 2017.
Well, thank you, Mr. Bhasin, for bringing us up to date with all these developments as far as markets are concerned. Here we were joined by Mr. Bhasin, who were talking about the global and Indian markets for us. With this, it is time for a wrap-up on WION Wallet. For more news and updates, stay tuned to WION, and thanks for watching us.